All right, a lot of people keep saying the tech bubble, it's right there. It's going to destroy the entire economy. But what happens to the safe haven? Remember gold, that safe haven? Joining us now on the phone, Peter Schiff. He's the CEO and Chief Global Strategist of Euro Pacific Capital. Peter, you're well known for telling people, listen, forget about stocks, go into gold and precious metals. Today, the Nasdaq's at an all-time high and gold's at a 5-year low. What do you tell people today?
Well, first of all, Charles, I don't tell people to forget about stocks. I tell people to own gold in addition to stocks, although I do think that U.S. stocks are very expensive. And in fact, it does remind me, you guys were talking a lot about the 1990s bubble, and what's happening right now with gold reminds me of what was happening during the dot-com bubble. Remember, we had a vicious bear market in gold from 96 to 2000. It was the opposite of the new economy. Everybody had faith in Alan Greenspan. He was the maestro. They believed in a new era. And gold got crushed. Gold stocks got crushed. The Wall Street Journal came out with an article or New York Times in 1999, who needs gold when you have Alan Greenspan? Well, we know how badly that ended. Everybody needed it because then gold was up 650% in the next 12 years. So I think people are making the same mistake again. They have faith in the Fed. They have faith in Yellen. This is the biggest bubble ever. And I think people should be buying gold, but they don't know enough to do it.
Well, I mean, a lot of people have done it, though, Peter. And let's face it, a lot of people actually was so frustrated with the market in 2009, 2010, even 2011 when gold was at the top. They sold gold. They chased performance, which we all tend to do. And they had to sell their stocks to do it. So at this level here, what would be the spark? What will turn this around? The Fed raising rates, will that actually get gold moving?
Well, as a buy the rumors, sell the fact, it might. I mean, the dollar's been rising on the idea that the Fed is going to raise rates, but I don't think that it's actually going to happen. I don't think the Fed can raise rates. That's why they've been at zero for 7 years. This bubble is so big that even a small rate hike will prick it. So I think all the Fed can do is talk about raising rates. They know that they can't do it. Now, could they do a 25 basis point hike just symbolically to pretend that they're going to do more? Maybe, but I don't even think they're going to do that. I think they're going to do QE4. And when the market comes to terms with reality, gold's going to take off. But when people are going to wake up, I can't tell you. It's amazing that they're so clueless for so long.
Well, listen, it's been a tough trade. I mean, we've got your friend Hillary Kramer here. She's been opposite you on this for a long time. Hillary, why is Peter wrong?
Because the reality is that as an asset class, equities are where you want to be right now. Yes, it's about the Fed, but it's also about fundamentals. And there was a lot of rebuilding that took place since 2008, 2009. And some of the smartest people in the room didn't realize that was going to happen.
Peter, listen, no doubt you're a brilliant guy, but are you emotionally, we've got a chart right now in the last 5-6 years, gold versus stocks. I mean, is there a point where you say you hedge yourself a little bit? You mentioned you are long some stocks as well. When is the average investor, because a lot of people want to sell gold at a loss here, why should they hold and what should help them out to sort of mitigate the damage?
Yeah, well, first of all, a lot of people were as bullish on stocks as Hillary is now in 1999, and they were that bearish on gold. But again, I've never told people to sell all their stocks and hold only gold. I tell people have 10 to 15% of your portfolio in gold, and I stand by that allocation. But I think stocks are very expensive in the U.S., and I think they're actually more expensive in general than they were in 2000 because the Fed has given more help to the market. The market is more dependent on 0% interest rates today than it was dependent on Alan Greenspan in 1999-2000. I think it is very dangerous in the U.S. market, and people have underestimated that danger before. They need to hedge themselves in gold. But again, I am not it's either or.
Okay.
And it's not about gold or stocks. It's about gold or dollars. It's about gold or yen. It's about gold or pounds or euros, because gold is money. So don't compare it to an investment like stocks. Compare it to alternatives for money. And I would rather own gold than dollars or euros or yen. I think they're going to keep on printing money. They're going to keep interest rates at zero, but they can't mine the gold. Gold is scarce. Gold is valuable. And if you want to save, it makes a lot more sense to save in gold than a fiat currency.
Okay, Peter. Hey, listen, I agree with you as far as 10%, too. I've been saying that for a while. Listen, when you get back from vacation, come to the studio and visit us, okay?
All right, I'm working out here in Puerto Rico, but
All right,
I'd love to come in the studio with you, Charles.
All right, see you soon.